Hello. Come on, YouTube. Go live, please. All right. Hello. Awesome. Looks like the stream is working. Hello, everyone. Welcome back, or hello to those that are new, and welcome to the Traders and PJs family. In case you don't know me, my name is Curtis, and I'm really excited for today's lesson, honestly. So yesterday is a lot about learning how it works, and today it's about showing it working. So I think this part is way more fun and way more exciting. I mean, learning how it works is cool, but actually seeing it work is way more exciting. So let's get started. I want to keep this video really short. Yesterday was definitely a learning lesson in terms of how much I should share in each video, and I'm going to try to keep this as short as possible so that the message is clear and it's easily digestible, because 2 hours of information is a lot to digest. All right, so today we're going to apply what we learned yesterday. This is a different series. This is the first episode of the $100 trading challenge, and today we're going to show how you should think about this week, because this week is a big week. Here's the table of contents on what we're going to talk about today. But today is a really, really big week. There is a lot of earnings for really, really big companies, which means that the market is very likely to move a lot. 8 out of the top 10 S&P 500 companies, which means 8 of the biggest companies in the US, are reporting earnings this week. That includes Facebook, Apple, a lot of the FANG stocks, which, if you don't know, it's Facebook, Apple, Netflix, Google, and then there's one more, Amazon. So they're all reporting this week, so it's going to be crazy. Things are going to move a lot, which is really good for traders if you're doing it correctly. Okay, so let's just start. Let's just start right away. First slide of the content is like I said, a continuation of the lesson. This is showing the application. So if you've not watched the first lesson of the From Clueless to Consistently Profitable Trader series, go watch that before you watch this. Remember, everything said on my videos is just my opinion based on my experience trading, and is for educational purposes only. Trading is very risky. Nothing I say is advice or a recommendation. Read the description and trade at your own risk. All right, let's get started. So this is just going to be a quick review from what we learned yesterday. Remember, minimum viable product. You don't need to know everything in order to be a good trader. Google first, ask second. I'm going to leave a lot of time at the end of this video for questions. And at that time, you can, just ask me directly. But, if it's a very simple question, I just prefer you Google it first. Think for yourself and have high awareness. We're gonna dive into this one a little bit deeper. But we're going to move on to the next 2 points here. Do not trade with money you cannot afford to lose. Almost think of it like a casino. Obviously, the profitability of success for trading is significantly higher, but you should still think of it like a casino and don't trade with money that you cannot lose, okay? Trading is risky at the end of the day, regardless of how successful you can be at it. A new philosophy or psychology I wanted to share is called opportunity cost, which means when you're doing one thing, you're giving up doing everything else in the existence of life. So if you're watching a movie for 2 hours, that means you're not doing everything else you could doing in those 2 hour time, because you can only be focused on mostly one thing at a time. So that's the definition of opportunity cost. And how it applies to investing is if you just save your cash and maybe put it under your mattress or keep it in your bank account, you cannot invest it, right? So that is an opportunity cost you're doing with the cash, which is why a lot of wealthy individuals don't recommend saving. What they recommend is investing wisely. All right, so let's dive deeper a little bit more into what it means to have high awareness. And we're going to watch a short video on YouTube from Silicon Valley that I was just started a few days ago right now. So this is a tech billionaire, and his name is Peter Gregory, and he is just watch and you'll understand how this applies.
Oh, Peter, you're here. We were supposed to meet 40 minutes ago with the guys from Astrophile about the emergency capital injection.
As we discussed, our North Carolina plant went sideways. So we need 15 million now, or we'll have to shut down.
Have any of you ever eaten at Burger King?
Yes. Why?
Well, I was just driven past one. And while I know their market cap is $7 billion plus, I realize I am unfamiliar with their offerings.
Okay, fine. But what does that have to do?
Is it popular among your peers? Is it enjoyed?
People seem to
So
like it.
I'll give you guys a quick summary.
They're so
These
like
two
just
guys that he's
solely
trying
of
to
these
are asking him for $15
burgers,
million,
so they are
and this tech
presumably
billionaire
cheap.
just won't shut up about Burger
They have
King,
other
and you'll
things,
understand why
chicken,
he
fish.
keeps on
I'm
thinking
sorry,
about Burger
what
King
are we doing here?
later in the video.
Here's what we will do. Monica, have one of the assistants go to the nearest Burger King location and purchase one of everything. This is which one?
The BK double stacker.
Fascinating.
Peter, I know that you are incredibly busy with this, but I made a personal promise to the Astrophile guys that none of their employees would lose their job, which will happen at midnight.
Do you see this?
The Junior Whopper.
No, not the sandwich. This seed atop the breading.
Those are sesame seeds.
A high number of these breadings have sesame seeds on them. Billions of breadings. Sesame seeds. They only grow in certain microclimates.
Peter, I know that you don't want to cause 173 people in North Carolina.
Cicadas.
And what a cicada is a insect that it lives in the environments that
Gregory,
sesame
this is
seeds are
ridiculous.
grown,
Mr. Gregory,
and they
we
eat
need
sesame
an
seeds.
answer, and we need it now.
Yes?
We need money now. And I'm sure that Burger King and sesame seeds and whatever else you've been mumbling about in here all seem lovely to think about, but they have...
Myanmar and Brazil.
No more of this, okay? Are we getting the money or not? Will you please just tell us what the hell is going on?
Amusing coincidence that 2 of the 3 countries that provide the world sesame seeds have such large cicada populations, no? The cicadas of Myanmar emerge every 13 years, while the Brazilian cicadas emerge every 17. Next year, they will hatch simultaneously for the first time in 221 years. Crops from both countries will be decimated. Unlike Myanmar and Brazil, Indonesia has no cicada population. I was surprised to see Indonesian sesame seed futures priced so low. I made a purchase, and now, if the shortage spikes the global price even 10%, we'll profit. Evan?
$68 million.
If you wish, I could tap that projected revenue and make you a bridge loan of $15 million, gentlemen. Unless you need more?
All right, so that's the video. Essentially, I think you guys get it, but essentially, you know, he thought about sesame seeds and how these insects that are going to eat them are in 2 of the 3 countries that make them is going to give birth and become adults and eat these sesame seeds. So essentially, Indonesia, the one country that doesn't have these insects, their sesame seeds are going to skyrocket in price, right? This is a example of awareness, and this is also Hollywood. What he did was really not good trading. He had no confirmation, and so I would not recommend trading the way he does, but it's just a really good example of being very, very aware in terms of always being aware of opportunities that you know, things around you that could potentially be an investment idea. All right, so I covered the next two philosophies. Remember, you are a beginner. It is normal to not be good at trading or consistently profitable yet, but hopefully my lessons will help shorten your curve. Let's move on. We covered this in the last video, but to become a trader, you should educate yourself, have a trading account. To start, you should have a paper trading account, which means you should trade with fake money, and always have a trading plan. And that is one of the main things that we are going to cover in this video today. And also, I know there's only 8 of you guys right now, but if you guys wouldn't mind liking the video, it would mean a lot to me. And if you guys find any of this valuable, but I'll keep moving on from there. Remember the 6 most common trading mistakes. I'm not going to go into detail of this, but remember lack of knowledge, not having a risk management, not having a trading plan, emotional factors and psychological factors, and don't worry about a fixed money goal. Worry about making each trade as good as possible, and don't be patient as possible. Don't try to need or want results right away, which is why you should paper trade before you trade with real money. Remember the must-knows that trading is not about making money. It is about not losing money. The PDT rule, you get 3 day trades every 5 business days. These are your life-saving bullets. Do not waste them, right? Do not waste them to take profit, and only use them if absolutely necessary. And if that means if ever the price touches your stop loss, get out and use a bullet. And now if you notice you're using too many bullets, and if you run out of bullets, stop trading until you have a bullet available. And if you keep running into using your bullets, that means you should rethink your trading plan. What do I need to start trading? You just need a brokerage account. Hopefully you guys have all opened one, preferably with my affiliate links, but I understand if you didn't use them, you don't have to. Remember never to use market orders. What is a market order? Is telling the market maker, which is the middleman between buyers and sellers, that you will buy or sell at any price. Never use them. Always use limit orders instead. All right, so let's talk about new stuff today. Methods of finding target companies. In order to keep this video short, I am going to tell you, we're going to go pretty quick through this, but we're only going to use very basic ones. But there are a million ways to find things to invest in. For example, having high awareness, like what was just shown in the video. But macroeconomic top-down method, which is what I talked about yesterday. The coronavirus is happening. Everyone is going to be quarantined, which means education is probably going to move online. And if you invested into the right online education stocks, you would have benefited significantly from them. Number 2, fundamental analysis. There is a lot of earnings coming. That is what we're going to focus on in this video. But you can also trade on economic calendar events like crude oil inventories that is released weekly, or unemployment numbers, or unemployment cases that are also released weekly, and actual news that comes out. We will not talk about technical catalyst methods like price action or chart patterns. I look for fundamentals first and then worry about technicals later. That's my way of doing it. You can do it however you want. Just use other people's ideas. I may have been a little misleading in my last lesson because I said, this is my favorite part, finding companies to trade. But I may have you guys may have misunderstood me. I never said I came up with my ideas. My favorite way of finding ideas is just following or listening to what other people think and trading based on what I think on their opinion. I don't just follow what people do, but I listen to other people's ideas and then form my own ideas. So YouTube is your friend. Watch Stock Market Live, watch Trading Fraternity, read the news, watch other YouTubers that trade. Those will give you a lot of great ideas. All right, but we're going to focus on earnings in this video. So let's go. Let's do this. Create a watch list. So everyone, I talked about Earnings Whispers last week. It is a free resource that sends weekly emails on the upcoming earnings. I love this resource. I can't believe it's free, just as much as Thinkorswim is free. It shows you a beautiful picture with all the logos of what is coming out. Like I said, the FANG stocks, Amazon, where's Facebook, Google, they're all Apple. They're all coming out this week, so it's going to be a crazy week. Now, let's just make a quick watch list. Instead of using a scan, we're just going to create a watch list on the most anticipated ones, which let's just use the ones that they show right here on their email. So let's pull up Thinkorswim. Hopefully you guys have downloaded that by now. Click this little plus button at the bottom, create a watch list right here. Then you go to the top, wait, how do I do this? Okay, yeah. So you click on this little arrow here, click create watch list, create a new one. It's as simple as that. Now you have a new watch, whoop, sorry. New, I did one earlier, so new 2, let's just do that. And then just simply, boom, move this over, and just put in the tickers for each of them. So let's do Amazon, and Tesla, Microsoft. I'm sure you guys get it. I'm doing this because I actually want this list. I might rename it though. Wait, how do I rename this? Sure, edit, new 2, and earnings week 2020 0427. Okay, save. So AMD, Apple, yep, AMD, Boeing, Southwest, Facebook. I need this bigger. Southwest Airlines, 3M, and GE. Oh shoot, GE. Darn it. Simple enough, right? Great. That is how you create a watch list. Simple as that. Now, something really, really cool that Earnings Whisperer also does is not just these beautiful logos and read these little excerpts about, they also show like what the market is thinking. So Amazon is confirmed for this time, Thursday, April 30th. The consensus is that it will be $6.35 per share. And Earnings Whisperer has an opinion as well. It thinks that it will be above that at $6.84 a share. Investor sentiment, which is basically people voting on their website, so don't trust this so much, but this is 80% believe that there will be earnings. Remember the idea of pricing in. Things can be priced into the stock as well. So if it has moved, I haven't looked, but if it has moved upwards a lot already, then be careful. If you still think it's going to continue to go up, then yes, you can invest in it. But remember what we do as traders. We do not try to predict trends. We ride them. So look for confirmation. Look for a confirmation of a trend. Number 1, look for a confirmation of trend. Number 2, look for a confirmation candle inside that trend. And we'll talk about that a little bit more later on. But consistent estimates are decline of year over year 11.8% in revenue and 22.98% with revenue. The earnings going down by 12% and the revenue going up by 23%. And Amazon is a unique case where that is happening today potentially. So that is the estimate. This is really cool. Another thing really cool about it is this. They actually show you and talk about average move during earnings and the options implied move, which is basically just expected move from this earnings. So I think they also talk about it here, 13.8. Option prices are option traders are pricing in 13.8% move for Tesla. So you can use that to your advantage, okay? And you can see what price it is at now and where it is at a 14% move, okay? But remember, look for a confirmation of a trend, and within that trend, look for a confirmation candle, then trade. And we'll talk about that later, but this is really cool. They show you, hey, what do people think the volatility and the movement of the stock price is going to be? All right, so let's keep going. So I just walked through a stock list, creating a watch list on Thinkorswim. I talked about volatility, and that is about it. So this is how you get trading ideas, right? You think you can trade on earnings or you can trade on other people's ideas. Let's move on. After finding one, right, you have to do both fundamental and technical analysis. Fundamental is not just top-down thinking, but fundamental analysis is just studying the qualitative factors, like not non-number-based factors of the company, and then technical analysis. Oh wait, that's not right. Sorry. Fundamental analysis is studying the company. Technical analysis is just studying the price movement and the volume. Okay, and those are the two differences. So if you're looking at the earnings, revenue, yada yada, then that is fundamental analysis. So I like to always go through this checklist, 1, 2, 3, 4, 5 things of my fundamental analysis, which is top-down thinking, right? Think about the world. How is the world currently doing, and how will that affect the company? How is the US currently doing, and how will that affect the company? How is the company doing, right? Now, if you're very ambitious, you can read the company's like 10Ks and 10Qs, which is the annual financial statements and the quarterly financial statements. I do not do that. I'm just saying. Is that irresponsible? Sure. I mean, but I would be lying if I said I do that very often, right? And I want to be 100% transparent with you guys. What I do is funny. Is usually read the recent news on the company instead. So I'll Google the news. I'll Google a company like, let's just say like Facebook, which I'm gonna find the Zoom news. Yeah, surprise. But this is just using an example that I know will show up. Facebook. Go to the news section in Google and look. Oh look, they're gonna add messenger rooms, right? So that's really good news, and they're gonna be competing with Zoom. We knew this, but this is just an example. Okay, so. Another thing that I always like to think about is Porter's 5 forces. Now, I won't go into detail since I don't usually do this for every single one of my trading plans, but keep these forces in mind because you're not thinking of them, that your plan could potentially be affected by these things that you're not thinking of. And that could be potentially a reason why your original trading plan did not work out as you thought it would. Let me show a quick picture of what the Porter's 5 forces looks like. It's right here. Oh God, what's happening? I don't know. Okay. It's right here. The 5 forces: existing competition, threat of new entrants, threat of substitutes. Like, for example, if you have peanut butter jelly sandwiches, a potential substitute is if the economy does really well and people have more money, then people might buy steaks instead. Or if the economy is doing bad, instead of steaks, people might be buying peanut butter and jelly sandwiches. Those are substitutes. Power of buyers and power of suppliers. I'm not going to read through all this. You can read through this on your own time, but know the Porter's 5 forces and how it could potentially affect your target company. Now, another thing I want to talk about is sympathy plays. Sympathy plays is, look, maybe the company you're looking at, you don't love it based on your analysis, but that doesn't mean you can't look at companies that they compete with, like, for example, United Airlines instead of Delta Airlines or vice versa. Now, let's go into the fun part. Technical analysis. This is fun too, though. Technical analysis, which I will cover on the next slide. So, technical analysis is creating a trading plan. Usually earnings, to be honest. Even if you have a news like, oh, I think Facebook is going to lose spending, guess when they're going to talk about that? It's earnings. So, a lot of the time, the movement stocks move the most during earnings because that's when most of the new information is talked about the company. Now, remember, your job as a trader is not to predict trends. Instead, it is to ride trends. You can actually be directionally independent, and a lot of times I actually am before entering a trade. And you simply wait and see after earnings comes out and after the earnings call what direction the stock goes, and you trade in that direction. Please keep in mind that just because earnings is better than expected, that does not necessarily mean that company's stock price will go up. Just because Amazon has higher revenue, but they may have worse earnings per share. Right? Which means like net income or profit. Profit is probably an easier term to understand. Just because they're making more sales doesn't mean their profit is good. Or just because their profit is good, what if their sales come down and there's a really bad reason that happened? So the numbers don't tell the full story. That's why earnings calls is really important. Earnings calls is usually a few hours after a public company releases their quarterly earnings, and a lot of times what they'll talk about this on there is their future guidance. And future guidance is usually more important, greater than, or more important. I'm just gonna do this, greater than or more important. Well, I'm gonna get rid of it because it looks stupid. Than historical performance. Okay, you are allowed to listen to earnings calls. By the way, it is a public call. You cannot talk on it, but you can listen. But I usually don't because they're so long. They're 1 hour each. So now let's put together a trading plan. You look at the major and secondary trend, and the micro trend is the day of, right? And that is what you're probably going to trade. But you also look at the major and secondary trend just to see kind of what the market has been doing on the target company that you're looking at. Remember your role as a trader. As a trader, you are not a fortune teller. You are a risk manager. Use the master file and make sure that your risk to return is greater than 3. I made some edits and updates to the master file. It's going to be a lot easier to use, in my opinion, to manage your risk and know where you should have some risk stop loss and where you should have your target price or take profit. And your job is not to predict trends. It is to ride them. You should have a hypothesis, but you honestly don't have to. And always look for confirmation for both trend and candle from the market that is moving in your direction before entering a trade. And then when you're executing, may the odds be ever in your favor. Here again are some of the chart patterns that technical traders are looking at, and keep those in mind because they're going to affect your stock trading, the price movement. So next one, I'm just going to quickly go through, quickly show, remember these learning resources. Go watch Trading Fraternity, go watch Stock Market Live. That's a great resource for trading ideas. That's what I use. Tasty Trade is a options website. They have a free course that teaches options trading basics. Great resource. I highly recommend them. I'll talk about it, but I'm going to spend like 30 minutes. You should really spend like 4 hours learning this stuff, right? Because it can be very complicated for people to understand. So the more you understand it, then the better I can teach you how to take advantage of the information, which will be really cool. So I did make a mistake, unfortunately, in my first video, and that is that the one link that for the technical analysis book was actually for the study guide. I bought it for $100. I was hoping to find on Amazon or some way to buy it for cheaper, but so I made a mistake. It was for the study guide and not the actual book. The actual book is $100. That is way more than $26. So I understand if you don't feel the need or compelled to buy it, but it's a really, really good book. I would highly recommend it. It will cut your learning curve on technical analysis by a ton. Okay, so I highly recommend it, but I'm sorry for the mistake I made in the first video. And just to show you guys, like, look, it says I bought the book. Okay, so I bought this $100 book. I was hoping that this was the actual book, and I was like, holy, $26! I can give my viewers such a great deal. Unfortunately, this is the study guide, and I should have better attention to detail for 5 years of working in high finance, but apparently I don't, and that is my mistake, so I apologize. Now, this is cool. Unfortunately, like, I can't really show you trading plans on this because it's the future. I don't know what the future is going to do. So we're going to go back 1 week, and we're going to look at the last week's performance, which is, and it's really crazy. I actually did this before the live stream right now. We're going to look at 2 companies that I would have done. I would have looked at last week if I had traded my $100 account. And we're going to look at Snapchat and Delta Airlines, okay? And those both, so Snapchat came out after Tuesday, and Delta came out before Wednesday, which means when are you going to trade both of these stocks? You're going to trade them on Wednesday, right? You want to trade earnings the day after that they come out. Obviously, if it's before Tuesday, then you'll trade it on Tuesday. If it's before Wednesday, you'll trade it on Wednesday. If it's after Tuesday, you'll also trade it on Wednesday. Okay, so good resources to use for trading. Earnings Whisperer, highly recommend. It's like the main thing we talked about in this video. Go subscribe to their weekly emails. They're amazing. Thinkorswim, also amazing. Go get that. Webull and Robinhood, up to you what trading platform you use. Those are the 2 I use. And if I provided any value during this lesson, please consider using my referral link in the description below. And also go subscribe to Wall Street Journal news alerts. Also a great place for trading ideas. Using your awareness, they're not going to tell you what to trade, right? But you can think about related ideas or sympathy plays. And then investing.com for the economic calendar. That's the one I use, but you can use economic calendars from anywhere that you choose. There are many websites that have them. I wanted to talk a little bit more about future lessons because I skimmed this last time because I didn't really have a lot of time, but there's a lot of ideas that I have, public versus private companies, financial statements, long-term investing, compound interest, which we touched on a lot last time. Reviewing your trades, that's also a great idea. Creating watch lists, which I touched on a little bit today. Fundamental analysis, technical analysis, yada, yada, yada. Support and resistance, which we'll be talking a little bit more about later today in this video. And trading options also, which will be in the future lesson. Same actions as the last video. Go educate yourself, start an trading account, and go prepare a trading plan. We will touch on this in the next 10 minutes, and then comment below what you want me to cover in the future, right? These are just potential lessons, but I would love to hear your ideas or what you guys want me to cover instead, and I can always do that also. Not required, but go buy the book. It will cut your learning curve by a ton. Quick reminders, most important thing about trading is not to make money. It is to not lose money. Remember the PDT, these are life-saving bullets. Keep them, they're precious. Avoid the 6 most common trading mistakes. Your job as a trader is not to predict trends, it is to ride them. I'm going to emphasize this in the analysis that we do in a bit. And be patient with your winners and impatient with your losers. And there's a little caveat to the winners part, because if it comes to the next day and it starts moving in the opposite direction, maybe you want to take the profit. right? So let's do that. After I go through these two trading plans for Snapchat and Delta, I will give you guys a few minutes to ask any questions that you guys have. You should know enough now to trade this week's earnings, and I hope you practice with fake money using paper trading accounts. So best of luck to you, and let's talk about Snapchat and Delta. Okay, so Snapchat and Delta, we talked about it was on the 22nd, the Wednesday, right? Delta came out the morning of Wednesday. Snapchat came out the Tuesday night. And you can see, right, there is a huge movement in terms of the stock prices. Look at the day before. Look at the day before. Not a lot of movement, giant movement the day of that earnings is going to affect. And then look at the next day. Not a lot of movement, okay? So you have a lot of time. But you also think like, oh, well, I have an opportunity to make even more. Let's say you guess the direction right. Probably not. I mean, look at the volume, right? Like the volume here is going to be significantly more than the volume here. I know it looks similar, but you have to talk about the total volume for the day. And you compare those, and there's a huge difference, especially for like Snapchat too. Look at that. So look at that. The day after earnings, it doesn't move much. So you can pretty much take profit whenever the next day. So let's talk about confirmation of the trend and then confirmation candle before you enter the trade. Okay, so let's talk about Snapchat first. Let's do Snapchat first. So let's say the market opens, right? And this is really cool, guys. This is my favorite part, so I'm really excited to share this. I hope you guys are excited to learn this as well. We wait for a confirmation of trend. Okay, so there's a few places you could have entered this trade for Snapchat. I'm looking for a strong move in one direction or the other. If you trade here, yeah, there are 3 green candles. Is it really moving in one direction or the other? Not really. It's kind of traded between this $12.50 and $15 mark, right? It's just like up, down, up, down, up, down. As soon as it broke here, then I see a trend. Okay, I consider this a trend. But I'm not going to enter this, okay? This would be predicting a trend. I need a confirmation of a trend. And a confirmation of a trend is a two-legged movement. What does that mean? That means the stock has to do this. Up. Oh, shoot. Delete this. Let's do blue. That means if it's going up, it has to do this. And if it's going down, it has to do this. Okay? This is when I enter, and this is when I enter. This is a confirmation of a trend because when it came down, it did not come down as low as the original starting point, or if it came up, when it came up on the downtrend, it did not come up to the point where it started, okay? So this is the trend. I officially see a real trend here going up. Then it comes down. But what do we wait for before we enter a trend? We have to wait for a confirmation candle. You cannot know that this is going to be green until, because this is a 5-minute chart, remember I use 5 minutes for confirmation, until this candle, this 5 minutes is up, okay? What does that mean? So that means that you would not have entered this trade until 11:05 p.m. And what time is that? And what price is that? You would have entered in this range, which is a pretty tiny range, $12.70 basically, or $12.80. So let's pull up the risk management, right? So you would have probably entered in around, sorry, what is this? Oh, is it 15? Oh, sorry, I said the wrong thing. 1580, sorry. Around 1580, right? So your entry price is your actual entry price. You put in 1580. Now, what is your stop loss? Your stop loss, for simplification, you're gonna learn and do better at this. But for simplification, your stop loss is going to be 0.5% above or below your support area. What is that support? The starting point of this little corner here. So what is the bottom, since it's an uptrend, of this little area? So you look here, up here, it'll say open, high, low, close, right? So you're looking for the lowest value here. So the low is 15.5, 15.73, 15.7, 15.66, 15.7. So 15.66 is your lowest point. So you come into here, you should put in 15.66, and you're going to have it down. So it's a 0.99 0.5%. 995. Yep. 995 of 15.66, which is 15.58. Hopefully the math makes sense. So this is your stop loss. Your stop loss per share is 22 cents. It's a 1.4% below your entry price. What is your take profit? To make it easier, I just made this return to risk ratio 3. So I took your stop loss, I multiplied it by 3, and I added it to your entry price. That is your target profit, 16.45. So let's go back to this chart. Where is 16.45? Right here. This was a winning trade. Isn't that beautiful? It's crazy, right? This is an actual day that happened for Snapchat. This is an actual event. So after earnings, I saw a confirmation of a trend. Boom, it broke this kind of $15.50 to $15 range all the way up here. I waited for a downtrend before I entered after receiving a confirmation candle, which is at 11:05. Make sense? I got a trend. I got a confirmation candle. Boom, I enter in this candle. I have to wait because I don't know this is actually going to be green until 11:05, correct? Okay. And so, look, but you're not going to take profit here, right? Because that would mean you're wasting one of your bullets because you're buying today and you're selling today. Instead, you're going to wait a day. So this is Wednesday. You wait a day. Boom. And it's the 23rd, which is Thursday. And that's beautiful. You have a lot of opportunities all here to exit. Now, if you exit below a few cents below, whatever, okay? Because you also have to be careful that it may come down, because if you go to the next day, Friday, it did come down, okay? So don't be too patient with your winners. Waiting one more day is fine, but if you just wait and think like, oh, Snapchat's now going to skyrocket, probably not. I mean, after the earnings, people feel comfortable with where it's trading at. It's probably, look how little it moved today. That is probably where you want to take profit. But look, this was a winner, and this is a real example. Now let's do Delta, okay? I'm going to be waiting for a downtrend. Now, the second the market opened, Delta had a lot of negative sentiment. That means people already thought it was doing terrible and it was going to do terrible because of coronavirus. So look how fast it moved, okay? This is already enough of a trend for me. It wasn't bouncing between like 23.5 and 24. It just skyrocketed down from 23 or $24 to 23.5, 24, 23, whatever. Now, this is a trend. I'm going to wait for confirmation of a trend, which means I need it to bounce, right? This is a confirmation. Went down, went up, then came down again. Okay. Now I'm going to wait for a confirmation candle. What is a confirmation candle? Right here. I have to wait, though. It has to finish, which means I would be trading at 10:05. Look how big this red candle is. But you would have entered anywhere around here. Let's be really negative and say you entered like at whatever, near the bottom, right? So 23.25 or something like that right here. So let's just say this is where you entered, 23.25 or 23.22. I don't care. 23.22 is where you entered. This is a short, which I messed up in the last example, but whatever. This is a short, right? So this is a short. So what are we looking for the stop loss? For simplicity, since this is a downtrend, we want to look for the top 0.5% above the top of the support area. This is the support area right here, right? So what is the highest value here? Obviously, it's going to be in this candle, and the high value is 23.59. So we multiply 23.59 by 1.005, 0.5% above that. Boom, 23.71. Okay, so your target profit is 21.76. Okay, let's do that. Draw a 21.76, right? 7676 here. Okay, it worked, right? It was a success, and if you have over $25,000, you could have exited here, but I mean, there's really no reason to waste a day trade. You can be a little patient. You're already winning. It never really ever came close to, let me see what's your stop loss here, 23.71. This is your stop loss, just for reference. It's all the way up here. It never even came close coming back to here, okay? So we wait till the next day to exit. Let me get rid of all these lines. It's kind of ugly. Let's just keep them. This is your target profit. This is your entry, and this is your stop loss. Okay, these are the 3 lines. The middle one's always going to be your entry, usually. Always, actually. So we go here. We go to the next day. What does it trade at? It trades at 22.68. Now, unfortunately, obviously, that is a lot less profit if we took it at our actual max profit. 22.66, let's say. So let's say 22.66. That means our profit was 56 cents. We were risking 49 cents. Unfortunately, this was only about a 100% risk to return trade, but it was still a success. You still made money on the trade, okay? And that is beautiful. So those are the 2 examples. I'll leave it there for today, and I don't want this video to be too long, so I will stay around for another 10 minutes for any questions that you guys have. So let me know if you guys have any questions. But hopefully those 2 examples were helpful to you guys. Again, if you thought this was helpful or really informative, please like the video, consider subscribing, and turn on your alert notifications. I'm going to do a lot more live streams from now on. I just enjoy live streaming instead of, making edited videos, so that people can ask questions and I can actually answer questions. So let me know if you have any questions, and I'll go back to this slide. Yeah, definitely. That was my feedback from yesterday's lesson. And definitely. That was my feedback from yesterday's lesson, and this really makes sense now. Awesome. I hope that you guys take advantage of this information and go trade this week and do very, very well. That is my dream scenario, and I will be trading as well. So if you guys want to hear kind of what I'm thinking about trading this week, let's see. So I probably will be trading, since it's a $100 account, I'm going to probably be trading kind of the smaller stocks. I can't trade Amazon because it's trading at, what is it trading at? What is this nonsense? It doesn't show the price. Whatever. All these are really high, right? Above 100. So I might trade AMD. I'm thinking about it. Might trade Southwest Airlines, and may trade General Electric. So those are really big companies, and I like to trade big companies personally. I think you should talk about shorting and other ways to profit from downtrends, such as buying options, because most people only know how to profit from uptrends. Good. I only want people to focus on uptrends right now. So if you're following a few different companies, and by the way, this is how I would set up for this week, right? I would have the S&P 500 down here, and because this also moved a ton during this day because a lot of Snapchat's earnings. These are the top 500 companies. You want to know what generally the market is doing, which is the top 500 companies is a pretty good approximate. And I want you to focus on uptrends. A lot of brokerages don't allow you to do downtrends because your account is so small. And a downtrend, shorting companies is really dangerous. You have unlimited risk when you downtrend because a company can go as high as it wants, but it can only reach 0, right? So I want you to focus on uptrends only anyways. So, but I will talk about options and how you can profit from companies going down, Austin. Just not yet, probably in a few weeks. Chris, are these for options? Depends what you're talking about. I'm talking about stocks when all these examples I used. But yes, these guys, the earnings whisperers, they talk about options because options will tell you what the market expects it to move. For example, Tesla's options traders are expecting a 14% move. Okay, so then you can also expect a 14% move. But I'm not talking about trading options right now. I'm only talking about trading stocks. Because normal trading doesn't help with negative trends. It does. Normal trading, you can still short. Yeah, Kevin answered your question. So, any other questions? I may stay on just for one more minute, so please ask any questions you have so I can keep this video to about 45 minutes instead of 50. Any last questions? Okay. I will take that as a no. What confirmations do you look for prior to entering? Two, in summary, and I will go through them again. I look for a confirmation of a trend. Then I look for a confirmation candle. Okay. So I look for a confirmation of a trend. Let's go look at Snapchat again. Right. So a confirmation of a trend, it broke this $15.5 to $15 range. It's going up, and then it came down and then up again. That is a trend. It's a two-legged movement, up, or down, up, down. Okay. And then look for a confirmation candle before entering. Time to go make bank. All right, Austin, good luck with that. What is short? Shorting, Google it, but essentially it is selling a company and hoping that the company goes lower. Confirmation, I think, comes from seeing a trend, then on the second part of it, there is a candle. Yep, that is exactly right, Austin. Any last questions? Great question, guys. Appreciate it. All right, I will take that as a no. Thank you guys all for watching. I hope that you found this super helpful. I was super excited to share this with you guys because, look, I found, the two examples I used are both winners. Obviously, Snapchat was a bigger winner because if you waited, I think you were above, or actually just right at your target profit, which is a 3-to-1 return, versus Delta, which unfortunately came back because you didn't want to waste a day trade, but you still made about a 1-to-1 return. So that's pretty good. All right, guys. Thank you guys so much for watching. I hope to see you guys at the next lesson, and always, appreciate the support, really. It means a lot to me. And best of luck. May the odds be ever in your favor for trading this week.